ahead and get started. My name is Sandy Truman. I am the office manager for our program called VITA. VITA is a volunteer income tax assistance program. It's been in existence. Actually, this program's been in existence since 1963. It amazes me. I've been with this program 19 years, and it still amazes me how many people we get that are first year that says, "Oh, I never heard about you. My friend told me, or I heard it on TV or radio, or IRS referred us." What we do is the same thing as any other preparer's office. The difference is that we don't charge. So everything we do is free. So we do your tax return for free, we e-file for free, you can direct deposit, there's no cost to do your direct deposit, whereas most of those pay for services, that's what you're paying for, is to prepare your return and to do direct deposit. A lot of those pay for services also have advanced refunds, if you will. They're not really advanced refunds. What they are is they're a loan, and you're paying sometimes up to 45% interest in order to get that early, okay? IRS, when they do their, if you can pass these down to the other girls, IRS deposits on a regular basis, and they're the only ones that you can actually get your refund from is from IRS, okay? So a lot of times those refunds that you get, or the refunds dictate how much you're gonna pay to some of those pay preparers. But like I said, in our office, we don't charge anything. So we don't take any of your earned income credits, we don't take any of your dollars for any reason whatsoever. This year, President Trump initiated tax reform. With that tax reform, he imposed more than 400 tax law changes. It's the biggest tax law change since 1986. So taxes have gotten, some people think maybe a little easier, some people think a little more complicated. You know, it just depends on what you have in your tax return. So some of the new tax laws that affect most people is the standard deduction. It used to be that we had a standard deduction and we had what's called an exemption. An exemption was a piece that for every person on your tax return, there was a $4,050 deduction off your taxable income. That exemption now is gone, and what we now have is flat rate standard deduction. So the standard deductions this year are $12,000, $18,000, or $24,000, depending on where you fall. So if you're single, doesn't matter whether you're single with dependents or single without dependents, your standard deduction is $12,000. What does that mean? That means that the first $12,000 that you earn is not taxable, okay? If you have one child or more and can be placed as head of household, the standard deduction is $18,000. Doesn't matter whether it's one child or more than one child, it's $18,000. What that means is that the first $18,000 earned or the first $12,000 earned is not taxable. If it's married filing joint, the standard deduction now is $24,000. Doesn't matter whether there's children on the tax return or not, the standard deduction remains the same. Whereas in previous years, you had your standard deduction plus your exemptions. So everybody was kind of floating, and every return was could be completely different. So with these flat rate standard deductions, you either fall under 12, 18, or 24,000, okay? Which makes it a little easier to kind of know where you stand as far as what your earnings are. And if you make below that, 100% of what you had withheld is now going to be refundable. Also, what that means is that if your income is under $12,000 and you're a student, meaning that you're going to post-secondary college, used to be that when parents claim you only get part of your refund and it was a little more complicated. Now parents can claim you and you still get your full refund if you have income under $12,000. So that was a little bit, a nice ruling on that side. The other change that was very critical in these tax returns this year was what's called child tax credit. For those folks, those taxpayers that have children or dependents on their tax return, in previous years, the child tax credit for any dependent under the age of 17 on a tax return was $1,000. And that credit is kind of unique in itself. Whereas, if you don't use it, you got it refunded 100%. But if you had to use it because you had a little bit of a tax liability, then whatever was left over would be refunded. Now, under these new tax laws, child tax credit has been raised to $2,000. But what that does not mean is that if you have 5 children on your tax return, you're automatically going to get $10,000. Okay? And you kind of chuckle about that, yet at the same time, I've been here a very long time, and I tell you that we have people coming in right now that turn around and go, wait a minute, I'm supposed to get $10,000 because the child tax credit, or the credits are $2,000 per child. I got 5 kids, so why am I only getting back $6,000? Okay, so at that point, what happens is that not 100% of that $2,000 is refundable. The max that's refundable is $1,400. So if you don't use it, you lose it. Okay, so there is no what people want to say per child or per kid, and I get phone calls saying, "Hey, what do I get for each one of my kids on my tax return this year?" There is no per kid or per child within the tax return. All of those credits, and that's what they are, is credits, are based on everything goes in the tax return. It's based on your filing status. It's based on your the amount of dependents that you have. It's based on whether they're under the age of 17 or not. There's so many things that go into that return that you can't just turn around and go, oh, I got 5 kids, I'm going to get $10,000, and then I'm going to get my earned income credit, and I'm going to get $16,000 this year. It doesn't work that way. But you'd be surprised how many people actually come into the office and truly think that and go, well, you know what, I'm going to go elsewhere because you guys don't know what you're talking about, because I'm going to go elsewhere because they're going to give me my $16,000. Okay, that's fine. Go ahead and go get your $16,000. And other young people have actually come in that really surprises me, that they listen to other people and other people give them wrong advice, and they earn money and think that they're going to get back 100% of what they earned. So they earned $10,000 when they only got back $500. They were upset with the fact that they weren't getting their $10,000. That's what they earned. So taxes can be a little complicated. When we're out there talking and everybody knows a little bit of everything and everybody thinks they know everything, people get confused. So child tax credit now, again, has been raised from $1,000 to $2,000. But only $1,400 of that is going to be a refundable credit. The rest is going to go on the wayside if it's not used within the tax return to buy your tax liability down. Okay. And then let's see. One of the questions that was asked earlier today is, why is it if I go over here, they're going to give me more money, but over here, they're going to tell me that I don't qualify for as much money? A tax return is only as good as the information that you provide and the information that that preparer is asking you above and beyond. So if you go over here and tell this preparer that, you know what, yeah, I don't have the socials, and but I have them written down. They're really not your children, but you're going to say they're your nieces, your nephews, and they're not going to question that. That's not doing you a very good service, okay? Because provability in the tax return belongs to who? The paid preparer or yourself? Anybody know? Bottom line, provability belongs to who in the tax return? Yourself. Okay? So you can go to a paid preparer and you can give them all the information you want to give them, and if all they're doing is just plugging numbers and plugging the information you give them, it's not a very good return. Because if you get audited, nobody's going to defend you. And when IRS sends you a letter and they tell you that you owe this money back, and you call them up and you go, why? And they say, well, you know, what did you put in your tax return? Well, I don't know, that's why I paid somebody else. Wrong answer. Okay, wrong answer. You as the taxpayer are required to know what goes in that tax return and why. So you should be asking questions. The preparer should be asking questions, and they should be providing you that information on an individual basis as you go along. And you should be reviewing that tax return at the end of the day before you sign off on it. Because when you sign, you say, everything in here under perjury is true and correct to the best of my knowledge, and everything is good, and I know exactly what and why and how, and there's no reason that I should be audited because everything is true and correct. Okay? Can you pass this down to the other young lady? Okay? So when you go to different preparers and you have different answers, or you go online, especially if you go online to TurboTax. How many of you have done that? Gone online to TurboTax? Start playing in there, and then you turn around and go, oh, well, if I can get 5,000, I wonder what it'd be like if I add another kid or I add another dependent, and oh, I can get back 8,000. Well, let's see, who else can I put on this tax return? So then all of a sudden you turn around and go, oh, okay, I'm just going to close, and you instead of closing it, you hit the wrong button and you send it. Well, guess what? IRS gets that tax return. And then when you really go to a preparer and you have all the true information, and then that preparer sends off your tax return, guess what happens? It gets rejected because you've already filed. But now what happens? You were just playing in there and you hit the wrong button, but you didn't do any print, so you don't have copies of your tax return. Without those copies, there's not a preparer in this world that can fix that return for you. So how do you get those copies? You wait until after June 15th and you contact IRS and have them mail them to you. And then your refund is delayed even longer. So that's how, you know, if you go to different preparers or you go online and you figure out, oh, well, I'm going to get X amount of dollars. And then you go someplace else and they tell you, well, you don't qualify for this, you know, and then you go someplace else and, you know, you just start shopping around. You're going to get different answers because we're going to say different things. And tax preparers are going to interpret that differently. Now, with that being said, those software companies are mandated by IRS. They all have the same calculations. So if you're true and correct, it doesn't matter whether you go online or you go to a paid preparer or you come to VITA or you do it yourself or you do it by hand, all the calculations should be the same. Okay? So that's how people start to get in trouble with their tax returns, especially a lot of our young people that want to go out and maybe not necessarily, or think that they're doing the right thing and then find out that they didn't, and then they've been audited. And an audit is no fun, let me tell you. Okay. Who knows rules for claiming children? Does anybody? How many of us have children in the room? 3 of you? Okay. So are all 3 of you working? No? Okay. So do we have significant others? Significant others in the household?
Yeah.
Are they working? Okay. So if that significant other is on the birth certificate and you have no income, but they do and you're all sharing the same household, then most likely that child or children are going to be put on that on the significant other's tax return. Okay. But what happens when you have children in common? You're working, your significant other's working, and you have 2 children.
1 each.
Wrong. Wrong answer. Wrong answer. And unfortunately, that is how most people think, is that we're going to share our children. Okay? So what happens with that when we share our children is we're really setting ourselves up, 1, for audit, because you share the same address. The addresses are kicked out at the IRS level. Okay? 2, you both claim what? Head of household, because the myth is if I don't claim head of household, I don't get my credit for my kids. So we both claim head of household. Unfortunately, only one taxpayer, period, in the entire house can be head of household. Okay? So what happens if you have, let's say, two sisters living in the household and you both have children? Who's head of household? Is
Whoever names under the house.
Whoever has the name in the contract.
Yeah.
Nope. Whoever has the larger income. Okay? Yeah, whoever has the larger income. It's the same thing when you have children in common. Whoever has the larger income puts all children on their tax return and the other person takes 0 children. Okay? So there is no sharing of children. And that's going to be, unfortunately, we see more and more and more of those audits because of the addresses. And people are starting to go out there in the paid world or come into VITA and find out that they can't share children, so they leave. And where do they go? Online. And they do it themselves because they know everything. And so when they do, guess what? In the summertime, they get audited. And guess where IRS sends them? To our office. So at that point, now we have to do what's called amended returns. And when we do amended returns, because you basically fraudulently placed a child on your tax return that you didn't qualify for, you now have to pay that money back with interest and penalties, and they'll take those the credits away from you for 2 to 10 years in the future. Okay, so it's not always the best thing, but sharing children is getting tougher and tougher and tougher to do, especially under these new standard deductions of 12, 18, and 24. Because if you're going to claim head of household, if you go to a paid preparer, you have to have provability that you are head of household and that you are the only person that claims those children. And so when a preparer turns around and hears, as they're asking questions, which they should be, and then all of a sudden you pop up and go, well, you know, I have 2 kids, but I'm only going to claim 1. Well, guess what? At that point in time, that preparer either going to put both those children on your tax return, or in our office, we're going to send you away. Because we're not going to do a fraudulent tax return, okay? So the other part of that is if you have a significant other in the household and you have shared children in common and the father's name does not appear on the birth certificate, fathers can never claim their own children, okay? So if you have on there father unknown, that other parent will never be able to claim their own child. Why is that? Because they will never be able to prove relationship. Not without a DNA. Okay? So that's the other key is when we start talking to people and we're doing those tax returns in our office, and we have, you know, I'm not singling anybody out and I'm not pointing fingers at anybody, but when we have a single dad that comes in and has a 3-month-old baby, my first question is mommy in the home? Well, question after question, because at that point it's probably not going to be that dad is going to claim that child, because a lot of times children are, the kids are still living, or the taxpayers are still living with their parents and daddy's not in the home. So it gets a little tricky in there, and unless you know what you're really doing and what you're really saying in there, it could get misconstrued. Last year, I saw more audits, and I've been there 19 years, and I saw more audits for the head of household with children on the tax return than ever before, ever. Okay. Also, and then it became the provability. And then the other part was identity, and the other one was provability of income. The state looking at income. So it's getting tougher and tougher to be able to try to share children. In some cases, you know what? People tell me, oh, I've been doing it for years, I'm going to take my chances. And that's fine. Take your chances. But 9 times out of 10, if you've hired somebody that you turn around and buy the insurance through, so some of those pay for services, you can buy insurance so that if you get audited, they're going to help you. Well, you're buying it against the preparer. And in 2 years from now, the preparer is no longer there. So you have no insurance and you're still on your own. Okay? And under the new rules, not everybody can stand up with you at the IRS level. So 99% of the time you're going to be on your own and have that provability strictly on your own. Okay, so it's a little bit tougher now as far as, you know, trading kids and sharing kids and splitting kids and those kinds of things, especially when you're at the same address, or if you have a good preparer that's asking all the right questions and you don't have all the right answers, or you stumbled through those answers. A good preparer would not do that tax return, okay? Not without doing it correctly. Okay. Let's see. Criteria for claiming head of household. Does anybody know what that might be? Head of household says that you and you alone are in the household with income that provides more than 50% of all living cost for all dependents in your home for more than 6 months. More than 6 months is not 50-50. We have 365 days in the year, not 364. So we have 49 and 51%. So therefore, IRS classifies the more than 6 months as 183 days in the year. So weekend parents, week on, week off parents, whoever has that child for the additional day is the one that's going to get to claim, unless you have a court document that shows that you are the residential care provider to that child, and that supersedes any other documentation, and you are the only ones that can claim those children. Okay. So it gets a little tough, gets a little tricky. You know, there are always a lot of questions that come up around the children, because there's a lot of money that is involved in putting children on the tax return. A lot of money that in today's world that goes into those tax returns. It's not uncommon for some people to have $9,000, $10,000, $11,000 tax returns with those dependents on their returns. Okay. Does anybody know what might trigger an audit? Anybody venture to guess?
Besides claiming kids that you're not supposed to claim.
Correct.
Being caught in the lie, basically.
That too, but two returns done at the same address and both claiming head of household. So if you have sister and sister living in the household and you both have children, you both have $30,000 a year in income, you better figure out, if you got exactly the same amount of income, you better figure out who's going to be head of household. Because if you both file head of household, you're going to probably get audited, because the address is going to kick up in the IRS system, and the head of household is going to kick up in the IRS system. Okay, so you have to be really careful with that head of household status. And what happens there is, myth is, and it's been a myth for many, many years, that if I'm not head of household, I don't get my money for my kids. But that is just a myth, because the money for the children, the earned income credit, is on a sliding scale basis. It's from $0 up to $54,000 worth of income. It's based on 0 children, 1, 2, or 3 children. So if you fall into that, you know, $20,000 to $22,000, $23,000 of income with 3 children, you're probably going to max out. But if you're only 1 child, you're not going to get as much. About $35,000, $36,000 with 1 child, you're probably going to get very little, because it's going to start phasing out. By the time you get to $54,000 with 3 children, married filing joint, you might only get $15 or $20. Okay, so it's on that sliding scale basis depending on where you fall in that pyramid. Okay, and that's where people like to go online and start playing in there. Nieces and nephews. I've had taxpayers that come in and they want to claim their niece and nephew. And then when we ask them, well, is it your brother's children or your sister's children? Oh, well, it's my friend's kid, but they'd call me auntie or uncle. Well, that's not your niece or nephew. You can't put those children in the tax return and get money for them. Okay? But that happens. So when they find out they can't, they go online, and they do online, okay? And then they get the, could get audited. Not to say that everybody in this world gets audited, but even the best of the best get audited. Even myself, I know tax law, I've been doing it for many years. I'll tell you, in 2011, I got audited for 2009 for the head of household status. I had to go backwards to 2009, and I had to get school records, and I had to get my house records and birth certificates and all kinds of stuff, and it took 6 months. And during that 6 months, I got nothing for my tax return. Okay, so audits are triggered on different things now than what they used to be triggered on. Okay. Within our office, we run with volunteers. So none of our preparers get paid. They all come in and volunteer their time, they volunteer their services. They take a class that we teach in-house to be able to come in and volunteer, and they put forth probably about total time before they can actually be in front of a taxpayer, probably between 60 to 80 hours of time just to learn a little bit of tax law to be able to do basic tax returns. So last year we trained over 100 volunteers. This year we've got about 80 volunteers. It takes an army to do this program in our office. When I first came into Community Action Partnership of Kern, which is where I work and where our returns are done. When I came in 2006, we did 129 returns, and now we're in the upwards of 5,500. So, and we don't charge for anything we do in our office. Okay. So, does anybody have any questions? No?
What if it's like multiple, like older people trying to file as head of household in the house? Like I have like my sister and my brother, and like how would that work?
So both of them file tax return?
I believe so.
Okay. Do both of them have dependents?
My sister does.
Okay. Your brother does not?
No.
Your brother cannot because he does not have a dependent. So your sister could, depending on her income.
I think she makes more than him for sure. She like recently got like a raise.
Okay. So is she more than 12,000?
I believe so.
More than 18,000?
I don't know about that part.
So with these new standard deductions, that head of household is kind of in that gray shaded area between 12,000 and 18,000, kind of a gray shaded area. But for single deduction, it's $12,000. So the first $12,000 is not taxable. And that's a good question, because what happens if you have mom and dad in the household and you're there and you have younger siblings, but mom and dad are not here legally or they're not working? Who claims the siblings?
Wouldn't it be the person who's actually able to file?
Whoever has the income, correct. So just recently, that situation came up in my office where we had 2 young siblings that filed tax returns, and their parents are here illegally, so they're not working. So the children were taking care of mom and dad and their siblings, and what they did is they both filed tax returns because they both had earnings, but what they did is they split the siblings, and so they both claimed siblings. Well, guess what happened? They got audited. Okay, so what happened when they got audited was IRS sent them over to our office. We had to amend both tax returns, fix both tax returns. And on the one sibling, we had to take the one taxpayer, we had to take the siblings off. Now this person owes back almost 10 grand, okay, with interest and penalties. The dependence that was on there now had to be placed on the other siblings' tax return, which increased their taxes, their return, okay? So now at that point, this person, she was 18, who claimed the children, is now going to be what we call disallowed any credits for any children or dependents that qualify on her tax return for 2 to 10 years. And that's not a 2 year that it happened now and in 2 years from now I'll get my money. That is 2 years from the day they put a child or a dependent on the tax return. So now she's not going to be, she's 18, she doesn't have any children of her own. She's not going to have children for, maybe hopefully a while. Well, the year that she puts a child on that tax return is year number 1. Okay, and it's 2 to 10 years. Okay, so they don't mess around. Okay, they don't mess around. When you start digging into what I always say that we live in the United States, we live in a very greedy society, because the more we see, the more we want, the more we can manipulate it, the better off we feel. Although, in the tax world, you've got the 50-50 chance. Will I or won't I? Where do you fall on that roulette wheel as to, are they going to audit me? Okay. The other part is that under these new tax laws that went into place moving forward, California did not conform to the federal law. So it used to be that if you were single with no dependents, you could still qualify for earned income credit if you were between the ages of 25 and 65. Okay? If you fall below, it's like $15,000 worth of income. Don't quote me on that. It's it's right around that $15,000 mark on the federal side. It's still that way on federal. But California turned around and said, "Oh no, since federal took other credits out of the tax return, anybody that is 18 years old and older that have income could qualify for earned income credit on the state side, regardless of whether your parents claim you or not, regardless whether you're a full-time student in college or not." Where all those things took effect. It's been evolving with California over the past 3 years for the California earned income credit. But this year, since all these new Trump tax laws went into effect, California turns around and says, "Oh no, we're going to go one step better. We'll just put more money in the tax return for our younger folks and our older folks." So for California, even if you are over 65 and have earnings, now you still qualify for earned income credit. So now identity theft has been really, really big in the federal world. We're going to start seeing identity theft in the state world because now there's money for the kids in the state side. Whereas before, for identity theft, people stealing identities, people stealing Social Security cards, people working under somebody else's social and filing returns. Now there's money on the federal side because of that earned income credit and the child tax credit. They would never file a state return because there was never any money there. But now there's going to be money, and there's money available, that I do believe that eventually we're going to start seeing identity theft on the California state side. So it's going to get a little bit tougher. Yeah. Does anybody have any other questions? No? Do you file a tax return?
Not yet.
Not yet? Are you working?
No.
No? Okay. And how about you?
No.
Not working?
Oh, I'm working, but I haven't filed yet.
Okay. And just yourself?
Yes.
No dependents?
No.
Okay. And
Unless you count my dog. I'm just kidding.
I'm sorry?
So unless you count my dog.
Yeah. And at one point in time, there was talk about putting dogs, cats, and fishes in the tax return. The IRS was trying to come up with a way of doing so because why? We spend a lot of money on our dogs, cats, and fishes.
It's not like having a kid, but it's basically like paying for it.
Exactly. I mean, we have insurance, and we have vet bills, and we have grooming bills, and they get sick just like children do, and that kind of stuff. But of course that never evolved, but there was talk many years ago about being able to do that. Yeah. So and so is your income more than $4,000? No. So with your income being less than $4,000, if you were living with your other older siblings that file, they could, your your sister, I think you said, is the one with the larger income.
Mm-hmm.
Your sister could also
Put me down as dependent.
put you down as a dependent,
Mm-hmm.
but then you still file your own tax return because it's under 12,000,
Mm-hmm.
and so you still get back 100%. But it might help her on her side, depending on her income.
Okay.
So yeah, that's something to for her to talk to the preparer about wherever she goes, or for you to talk to a preparer. Are you a full-time student anywhere? Is
No.
anybody a full-time student? No. Okay.
I know you're asleep.
So and then how about you guys? You guys file a tax return?
Well, yeah, but I had some issues with mine. Like the federal government accepted it, but then the state didn't. They took it out.
Okay. So when did you file? You filed 2018 already?
Yeah, that's the one I just.
Okay. Did you go online and file?
Yeah, I did H&R Block.
Online?
Yeah.
Okay. So did you pay for that state return?
No.
That's probably why.
Well, cause I did file for head of household, but I didn't make over 12,000.
Okay.
But I'm the only person in my house, so I.
No dependents?
No.
So you'll probably get a letter from IRS asking you about head of household. Okay. And the state, that could be another reason why it was rejected, is because there's an additional form for provability of head of household. And without that, that's probably why. So you probably want to go, well, I don't know if you can even go back in there and change that. As far as the state, it may have to be, did you print those documents? Did you print that whole return?
No, because it said it was pending.
Okay, so it's probably pending because of that head of household status.
Okay. So would I need a file for,
Print those documents, okay? Print your tax return, federal and state, and then call me, okay? So that we can fix that and get it done correctly, and so that we can do the amended return on those before you get audited,
Okay.
okay? All right, yeah, okay. File tax return? Working?
No.
No? Okay. How about you? Working? No? How about you?
No,
Not
just in
working?
school.
Just in school? Are you college?
Yeah.
Are you full-time?
Only part-time.
Only part-time, okay.
Okay.
So, because you're part-time, are you over 19?
23.
So, you're on your own. You don't go on parents' tax return unless they choose to put you on there. If you're still living at home with your parents, they could put you on there.
No, I have my own apartment.
Okay, so then no worries there. Okay, and for you back there, do you file tax return?
This year, for last year, I got like 3 different tax return
W-2s?
Yeah,
Okay,
because I had like 3 different jobs
okay,
all of last year.
okay,
So I'm not, but the jobs are like less than 3 months, less than 2 months. So
Okay.
I'm not going to file.
You want to file because otherwise you're going to give away your earned income credit for baby.
Would I still be able to,
Yes,
even though the jobs are, because I didn't think I
Correct.
would be able to, because they were
Earned
like
in-
2 months.
earned income credit is from $0. Well, actually, let's say $1 because you can't make zero. $1 to $54,000. So wherever you fall in that food chain on dollar values will depend on how much you get back in earned income credit.
Oh,
And
okay.
generally, the earned income credit is about 60% of what you made, earnings wise. Okay, so and then you also have California. So don't throw money away.
Yeah.
And that's where people get really lost in translation. Is I'm not going to file because I didn't make very much money. But when you have dependents, you're giving away a lot of money.
Oh, I
Okay.
didn't know that. I
Okay.
didn't know that. 'Cause I
Yeah.
just, you know.
Yeah. So even if you have baby on December 31st at 11:59 p.m., guess what? You get baby for the whole year.
Oh, really?
Okay.
That's cool.
So you get the earned income credit, and then if your income now is $2,500 or more, then you still qualify for some of that child tax credit.
Okay.
Okay. So come see me.
And I just got an email like last week, so.
Okay. Yeah. So to schedule an appointment, dial 211. Okay.
Your number's not on the.
My main number is on there, but my appointment line is, I don't know, is on these documents.
VITA's really good, like half
Okay.
the people that even work here are gonna use it, like I use it myself too.
Stephanie uses it, you use it, I think there's a couple of other people. Stephanie, for those of you, Stephanie, I've been seeing Stephanie for
Like 8
probably,
years.
yeah, a long time, a very long
Longer than you.
time. Yeah. And you know, some of my volunteers, I'll tell you, even for some of my volunteers, I've got volunteers that have been with me, this is their first year, and up to 12 years. Some of those volunteers I have watched grow up from babies in the tax returns, that when they were, 7 or 8 years old, literally, and then I started doing their parents' tax return, and then at 17 they started coming in and volunteering, and then when I had openings, because we do hire, throughout the first seasonal, we do have a few positions, then I placed those kids in my office as their first jobs. So now this particular person is in Fresno making, I think, about 80 grand a year. So, so there is the opportunity. Volunteering is volunteering. It keeps you busy. It keeps your mind busy. You're giving back to the community, but yet you're learning a skill that you're never going to forget. And we're young enough that at that point in time, don't compare what you do with what your next door neighbor did, and you don't talk about what your income is versus what this person's income, and their refund was $9,000 and yours was only $4,000, and call up the preparer going, well, how come? Because confidentiality, they're not going to tell you anyways. Okay, but again, we see that all the time. People call me up all the time. Hey, you know what? My coworker, we work together, we make the same amount of money, we work the same amount of hours, and they got back more than me. Why? Don't know. Did they have more children than you? No, we have the same amount of children. Do they own their home? Well, that's none of your business. Well, then don't ask me those kinds of questions, okay? Because every tax return that you do, every tax return that you do or anybody else does, for the rest of your life, you will never have two returns that are ever the same. So don't say that, last year I got back 8 grand and this year you're only getting back 5 grand, because you cannot compare one to the other. Last year you may have had less income. Now you've got more income. The more you make, the less you get. The older your children get, the less you get. So it fluctuates on a year-to-year basis. Maybe this year you had 3 children and one of them now aged in place and they don't qualify anymore. So now you get back less.
So tax returns are like snowflakes, no one are the same.
Exactly. And you can't compare one to the other from your next door neighbor, your best friend, or a sibling, or anybody else, because you're unique in yourself, in itself. Okay? Yeah. But we definitely want to make sure that we get you with that earned income credit. We're not just giving that away.
Yeah.
Okay? And then, yeah, and Amanda, you're getting ready to file, right?
Yeah.
Yeah. Do you go to VITA?
Huh?
Do you go to VITA?
No.
No?
I've never heard of it.
Okay. So where do you normally go to do your tax return?
Nowhere really. This
Okay.
is probably my first time actually doing my taxes.
Okay.
Last year it was my aunt did mine for me.
Okay.
I just had her.
Okay. Okay. So, schedule an appointment by dialing 211, and then follow the prompts. When you dial 211, those are the only 3 numbers. 211. Follow the prompts. 8 for English, 9 for VITA, and it'll take you right into my call center. And I've got 4 people on phone scheduling appointments.
It's really worth the 2 minutes it takes.
Yeah. And we schedule appointments every 30 minutes based on how many people we have on volunteering. And we really, truly try to pride ourselves on getting you in and out. So if your appointment's, let's say at 10 o'clock, and you show up at 10, it's going to take you 10 or 15 minutes to fill out the paperwork. By the time you fill out the paperwork, you're going to be seen within about 5 minutes. It's going to take about 20 minutes to do that return. You're going to be out of there on time, because we're going to have another 10:30 appointment coming in, filling out the paperwork. By the time they're finished filling out their paperwork, you're leaving and they're coming in. So it's about a 45-minute start to finish if you're there on time. Okay. What you will need to bring with you is Social Security cards for everybody on the tax return. your ID, and proof of health insurance, along with your tax documents in our office. Okay? Why do we require social security cards? Anybody know?
Because it's easy to just get somebody's social security number.
It is very easy to just transform numbers and the name isn't correct. And I'll tell you, many years ago, just to tell you how easily it can be, people can be misdrued. I had a family that I was seeing and had been seeing for a couple of years back then, and this was 11 years ago. And so I'm watching their kids on the tax return grow up. And then I get this guy in my office to file his very, very first tax return. I didn't recognize the name. Okay? I did not recognize the name because it was not associated to the tax return. And so this young man has his W-2 and he's got a social security card. And when I asked him who this person was, he said it was his niece. Okay, well, what's your niece's birthday? He had all the right answers. Okay, we filed the tax return and I'm asking him now, nobody else is going to file on this niece. Mom is not in the house, daddy's not in the house, nothing like that. And he's like, no, I wouldn't have the card if I couldn't. Okay, fine. So I trusted him. We filed the return and guess what? Got rejected. Why? Because the niece had already been claimed. So now I'm calling this guy up, telling him that the niece has been claimed. This guy's 18 and the niece is 17. That's still okay. People overlap families all the time. And so he was really frustrated. About a week later, I get a call from a paid preparer. He's in a paid preparer's office trying to refile his tax return to claim this niece. Okay? So now this paid preparer is calling me and we're discussing, and as we're going through, she's like, yeah, no, there's too many things that we just can't verify, so I'm not going to file this tax return. It was probably a week later, this family comes in, and as we were talking, this family's telling me, oh, my son came in and filed his tax return, and then it clicked, okay? And it was their son. He doesn't have a niece that's 17. He stole the social out of somebody's dresser drawer, okay? And so now at this point, the parents had decided he was 18, they're not going to put him on the tax return. They threw him out of the house. He can go do whatever he wants to do. But now the return was rejected. Okay, fine. Well, now he just graduated high school and he was in the home for more than 6 months. So guess what we did? He went back on mom and dad's tax return. So then he had to come in with his tail between his legs to fix that tax return, and he ended up owing. Rather than getting back money, he ended up owing, is what happened. So when you're young and we get a little greedy, we just get greedy and it comes back to haunt you. And now, he's learned his lesson. It only took one time to do that. But you'd be surprised how many people, not just young people, but older people that have never worked and now all of a sudden they're working and now they want to get all these credits and, those kinds of things. So, just wherever you go, whatever you do, please, 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 just be careful. If that preparer that you're sitting in front of is just plugging numbers because that's what you want them to do, they're not providing you a good service. If they're not asking questions, and you're just sitting there waiting for them to finish the tax return and there's no words, and they just take all your stuff and go, oh yeah, okay, they just plug those numbers and give you your tax return and go, here, have a nice day. That would be like a doctor that I wouldn't trust. Okay, so just be careful out there, and wherever you go, whether you use our office or you don't use our office, it's totally up to you guys. Just keep in mind that those fees out there are expensive, and they do take a portion of your earned income credit as part of your fee. So we don't charge anything at all. Okay. Anybody else have questions really quick before we go?
So when I schedule payment on the 201 thing, they'll tell me everything I need to bring to the office.
Yes.
So I
Yep.
forgot what you said.
Yep, they'll tell you exactly. And then just keep in mind that no children at the time that you come in for your appointment. Children are, in the tax world, is very, very distracting when you have all kinds of kids running around. So, yeah, okay. Perfect.
Thank you.